situation one.
Right. You bought Apple at $700. The current price is $490. Do you sell and take the loss?
Why? Why not?
Yeah, well, it depends on circumstances. Just a plain price drop isn't enough to just sell the stock. You need to analyze the reasons behind it, because on the one hand, it is important that you realize that there's something wrong with the company before you sell the stock, but you also shouldn't hesitate to sell it in case something is wrong, because otherwise getting emotionally attached to company stock isn't actually going to make you any money in the long run.
So, but in this particular situation, you would do what? You would, well, if, for example, you know the circumstances and...
I suppose I wouldn't sell the stock yet.
But why would you take the risk? Because the risk is a quite big loss. You get a quite big loss.
Oh, yes, but statistically, our losses are usually compensated by gains.
Okay, so you look at this in more long term.
Yeah.
Okay, so and imagine the same situation with the same numbers, but how would you react if tomorrow were the iPhone 7 presentation?
At the current point in time, I wouldn't sell at all, because I know that at this point in time, it is actually irrelevant if the product that Apple releases is any good or not. People are going to buy it for now because the company hasn't betrayed their customers yet. So the stocks would inevitably rise, in my opinion.
Okay. Now, second situation.
Apple again. You bought Apple at $380. The current price is $494. Do you sell? Why or why not? Yes, it goes the same as before. You have to look at the specific circumstances. However, it depends on my current goals. If I need a quick buck, I suppose I could sell the stock. But if I'm looking for long-term investment, there's still a chance that the stock will rise. It's not that simple, just looking at the plain numbers of buying low and selling high. But I guess in this case, since I guess I need a bit of a buck, I might sell.
So short term, like.
In this case, yeah.
Okay, but if you sell and it goes higher, would you regret your decision?
Well, a bit, but it wouldn't actually make a difference. I just have to move on, gain more experience, and maybe analyze things better next time round.
So you would focus on the gain you had. It was little, but it was a gain.
It was still a gain, yeah.
Okay. So the same situation, and imagine that the last two times when Apple's price went till $500, it started dropping and did not go above. How would you react now when the price is $494?
I'd be suspicious in a way, because of course it's impossible to actually guess the point when it's going to drop, if it is going to drop. So suppose I might sell just in case.
Just in case, okay.
Although I'd probably rely on intuition more than analysis at this point.
Yes, okay. And the third interpretation of this situation, the same prices, and you see a video in social media that the new iPhone 6 has a defect of bending after a little time of use, which now is a real trend. So what do? You see a video, it's very popular.
Right.
Yeah.
Yes, I have seen it, yes. Well, probably, well, I take care of my iPhone, but anyway, it would depend, because Apple has had failures before, like Apple Maps, and it didn't actually affect the stocks that much. Well, there was a bit of a drop, but it was still followed by a larger increase in stock, and Apple currently isn't at an all-time high in stocks, so I suppose I wouldn't sell it just because of one small defect. Because, as I said before, Apple has a long history which plays to their strengths, which is that people won't abandon their company that easily.
So you take the risk that from 494 it can go down.
Yeah.
Yeah. Okay. And third situation, still Apple.
You bought Apple at $380 when the price is $494. Your cat steps on your laptop and accidentally steps on keys that sell your Apple shares while you briefly stepped away from your laptop. to open your brokerage account.
It's
sorry.
open, yeah.
Yeah, brokerage account. Will you buy back the shares for $494? Why or why not? Yeah, cats, right? Well, if you would take the obvious route, just buying stock back wouldn't actually change anything because you would buy it for the same amount of money that you sold it. However, I don't know, I suppose that if you sell, maybe you should just take it because...
Buy it back?
No, just keep it as it is and just sell them and gain some money because you bought it at 380 and then you kind of sold it, or your cat sold it for 494.
You have the profit.
Yeah. Still have the profits, and I don't think that now trying to buy back the stock and making a hassle out of it by probably not actually paying attention what happens to the stock market and just focusing on buying it back won't actually reap any long-term benefit.
Okay, but let's take a situation like this. What would bring you a higher dissatisfaction if you don't buy back the stock and the price continues to go up, for example, $600, or you buy back the stock and the price goes down till, for example, $350?
I would obviously regret more buying it back because I would, in the end, overall have lost $40 per share. And yeah, I mean, even if I didn't buy back the stocks and they suddenly, I don't know, rose 700 something, I would still have gained money in the long term, and I could just focus on investing the monies elsewhere, wherever I had an opportunity.
Okay, so it is like a lower regret when you don't get the money you could possibly have gotten? Yes?
Yes, I guess I look at the smaller picture in this case more than the long-term one.
Okay, thank you for your interview.
Michael.